Welcome to the deep dive. Just a few weeks back, we briefly touched on intuitive machines, ticker LUNR.
Right, the NASA lunar partner.
Exactly. And since their Q1 earnings dropped, well, things have really heated up and the stock definitely shows it.
Yeah, quite a surge.
So for you listening, if you want the quick rundown on what's driving this, we're going to dig into their recent performance, see what it means for their future.
And we're looking mainly at the Analytica investor report, right? The one titled Intuitive Machines Surges Post-Earnings.
That's the one. Is there more liftoff to come? Okay, let's get into it.
Well, the first thing that really stands out is just the momentum shift, like the report says. Q1 wasn't just, decent earnings.
No.
It feels like they really backed up the earlier hype with actual results. I mean, take the revenue.
Yeah.
$62.5 million.
It's like 14% from Q4, wasn't it?
Exactly, sequentially. And that's not just a small bump. It kind of suggests they're getting faster at turning these government programs into real money, especially when you look at how growth usually goes in the space sector. A jump like that can signal, a real turning point.
Yeah, and it's coming from a few places, not just one mission. The report mentioned the CLPS lunar missions, the rover work, LTVS, and the Near Space Network services, too.
Diversified streams there.
But it sounds like Q2 could be even bigger. They're expecting those success payments from the IM-2 mission.
Ah, yes, the South Pole landing. That was a big one.
Landmark landing, yeah. So it feels less like one-off projects and more like they're building something, well, sustainable.
I think that's the key word, sustainable. And you see that reflected in the margins, too.
Okay, tell me about those.
Well, they hit 11% gross margin in Q1. That's about $6.7 million. And it's the third quarter in a row they've been positive.
Third quarter. That's pretty consistent.
It is. It's not just a minor win. It really suggests they're getting more efficient operationally and maybe more importantly, shifting towards those higher margin things like infrastructure and data services. It's not just about launching rockets anymore.
Right, building the ecosystem. And speaking of stability, that backlog number caught my eye. $272 million.
Yeah, that's solid.
That seems like a really strong base for future earnings, doesn't it? And they mentioned a new award, too. OME's the third, Federal Services.
Absolutely. A backlog like that, it's contracted work, remember? So it gives you a pretty good degree of predictability for revenue down the line. It shows they're not just winning contracts, but, executing on the ones they have. It's a buffer against the ups and downs of the space business.
Okay, now this was a real highlight for me.
Yeah.
The positive cash flow.
Yes. Very important.
$19.4 million in operating cash flow and $13.3 million in positive free cash flow. Just for Q1. That feels like a major shift, doesn't it? Towards, long-term health.
It's a huge milestone. Generating positive free cash flow, that's kind of the goal, right? For sustained growth, for independence.
So what's driving it?
Well, the report points to really disciplined management of those milestone payments, making sure they get paid as the work gets done.
Makes sense.
Combine that with the improving margins we just talked about, and yeah, it paints a picture of a much healthier financial situation.
And that healthier footing connects to the balance sheet, right? They ended Q1 with $373 million in cash.
A strong cash position.
The report said successful warrant redemptions helped here. Now, for listeners who might not be deep in finance, what exactly are warrants and why is getting rid of them, redeeming them, a good thing?
Okay, yeah. So think of warrants basically like long-term options. They give the holder the right to buy company stock at a set price for a certain period.
Okay.
Now, companies use them to raise money, which is fine, but having a lot of them hanging out there can create uncertainty for investors, like an overhang.
Why is that?
Because if they all get exercised, suddenly there are more shares out there, which can dilute the value for existing shareholders.
I see. Dilution.
Exactly. So by redeeming them, Intuitive Machines basically cleaned up its capital structure, removed that potential dilution risk. The market generally likes that, gives the company more flexibility.
Got it. So clean financials, but the core is still the missions, right? And that second landing at the moon's south pole, the furthest south ever, that's huge validation.
Massive validation. It shows their tech works and works reliably in a really tough spot. It wasn't a one-off success.
And NASA seems to agree. They're still backing them, right? With those NSNS milestones.
Yeah, $27 million committed through the first half of 2025 for the Near Space Network services.
So that cements their role as a key NASA partner.
I'd say so. That continued funding, it signals real trust from NASA and their capabilities. They're building serious credibility with these successful missions.
Okay, and they're not just landing things. What about the rover? The Lunar Terrain Vehicle Services, the report mentioned progress there.
Yeah, ongoing development. They've completed some key design improvements in Q1, apparently.
And there are NASA rover contracts coming up for grabs, potentially.
That's right. And winning those could be another huge catalyst for them.
How so?
Well, think about it. Reliable wheels on the moon are going to be absolutely essential for, long-term exploration, any kind of commercial activity up there.
But you need to move around.
Exactly.
Yeah.
So by working on design, on autonomous driving for the moon, Intuitive Machines is trying to position itself as a leader in lunar mobility. Getting those NASA contracts would bring in revenue, sure, but it also locks them into that future lunar ecosystem.
Makes sense. Now, something else that stood out was diversification. They're not just looking at the moon, it seems. New Q1 awards mentioned $10 million from Texas for Earth reentry and microgravity research. And something with the Air Force? Jetson.
Yeah, the Jetson Stealth Satellite Propulsion Program.
So what's the big picture significance of branching out like this?
It's smart strategy, vital for resilience, for growth. Relying too much on one customer, even NASA, carries risk.
That Texas award, it opens doors potentially for things like sample return missions from the moon or Mars eventually. And Jetson, well, that gets them into the whole national security space market.
Which is a big market.
Huge market. Different needs, different opportunities. It shows they can take their core expertise and apply it in, related but different arenas. Broadens the base.
Okay, let's talk valuation for a second. The stock's jumped, but the report suggests it's still trading around, 2.5 times projected 2025 revenue?
Yeah, based on their guidance of $250 to $300 million for 2025.
And the comparison was that similar space companies are trading at maybe 4 to 6 times revenue.
Correct. Which naturally raises the question, is there still upside potential here?
What do you think? Does that comparison hold water?
Well, it's a key point investors are looking at. The valuation relative to peers and their own growth forecast. It does suggest the market maybe hasn't fully priced in everything yet. The recent successes, the future potential.
So more room to run, potentially.
Potentially, yeah, if they keep executing. But, you always have to be careful with peer comparisons. Every company's situation, its risks, its specific growth path is unique.
Fair point. So looking forward, the report lists several catalysts. We've got the IM-2 success payments coming in Q2 2025.
That'll boost the numbers soon.
Potential new rover contracts later this year.
That's a big strategic one.
The ongoing NASA NSNS milestone payments.
Kind of like recurring revenue.
And then this expansion into defense with Jetson and the microgravity stuff. Feels like a lot of potential triggers for more growth.
Absolutely. Each one of those could really build on the momentum they have now. The IM-2 money is near-term cash. The rover contracts are about long-term strategic positioning. NSNS provides that steady base. And diversification opens up whole new, potentially very large markets.
So if we wrap this all up, the main takeaway is what? Intuitive Machines is actually delivering.
I think so. They're showing real progress on their lunar plans. And it's backed up by, increasingly solid financials and proven technology. They're moving past just the promise stage.
From concept to execution.
Precisely. You've got the improving financials, the strong NASA relationship, and the smart diversification strategy. It makes for a pretty compelling picture for their growth potential. They're achieving real things now.
So for you listening, maybe think about how these advancements from Intuitive Machines, in lunar infrastructure and propulsion and robotics, how might that ripple outwards?
Yeah, what other possibilities does this unlock? For exploration, sure, but also for, commercial activities in space down the road.
It really does feel like we're seeing the start of something transformative, with private companies like LUNR playing such a key role.
Definitely worth keeping an eye on.
So consider those broader implications. Keep exploring what's happening in the space industry and the role these private players are carving out. Thanks for taking this deep dive with us today.